Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 17th December 2024. Cryptocurrencies are capital assets, and any profits made on their sale prior to the 2022 rules laid down by the government should be considered capital gains and taxed accordingly. The Income Tax Appellate Tribunal has ruled. The decision is significant as it recognizes virtual digital assets as capital assets. Any income from the sale or transfer of virtual digital assets from April 1st, 2022 onwards is taxable at the rate of 30% plus surcharge and cess, following the government's latest notification. Moreover, since income from the sale of cryptocurrencies is to be taxed in line with the provisions applicable to long-term capital gains, the tribunal directed the assessment officer to allow the person the deduction benefits as applicable under the law. The IASB has completed the technical work on the revised IFRS Practice Statement 1 set for release in 2025. The update aims to improve reporting on value creation, cash flow, and align with sustainability standards. The Income Tax Department has intensified its scrutiny of foreign income and assets held by Indian taxpayers. Notices are being sent to employees of multinational corporations holding employee stock options from foreign parent companies, especially those who fail to declare dividend income or ownership of such shares in their income tax returns. Tax authorities are leveraging information sharing agreements with countries like the USA and UAE to identify ownership details of foreign assets. The announcement made by Dixon Technologies to set up a joint venture with Chinese mobile maker Vivo, in which the former will have 51%, could help the homegrown electronics manufacturing services player to grab over a fifth of the country's 288 million overall mobile phone assembly market and close to a fourth of the smartphone sweepstakes. The deal with Vivo will help Dixon increase its share of the smartphone assembly business to around 22 to 23% and give the firm control of more than fifth of the phone assembly market. The tax liability of several Indian companies which have operations in Switzerland, including bellwether IT and pharma firms, may rise with the Central European country announcing a decision to increase the withholding tax on dividends their Swiss arm pays to Indian parents under the source rule from 5% to 10% effective January 2025. Switzerland cited a 2023 ruling by the Supreme Court in Nestle India case for the move. The Supreme Court ruled that the bilateral double taxation avoidance agreement between the countries doesn't automatically entitle it to a lower withholding tax in India for dividends transferred to the Swiss parents unless a notification to this effect is issued by the Indian tax authorities. Lubrizol Corporation, a Berkshire Hathaway company, and a specialty chemical firm has big plans for India. Close on the heels of its $350 million investment in the country, the company specializing in delivering sustainable solutions aims to double its business in India over the next 5 years and actively expanding its global capability center in Pune. After recently hiring 100 people, it targets absorbing another 250 to the 600-strong employee base in India. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.